So I'm with Mike Williams, the executive chairman of Aftermath Silver, and we're going to learn about the Berenguela Project. Mike, how are you today?
Good, Robert. Thanks for having me on.
So I've followed the Aftermath story for the last couple of years, and it's been a silver project. You know, the word silver is in the name, but there's manganese, which is actually an important component of the project. And now I've noticed that Aftermath is talking a lot more about copper. So tell us about that.
Well, you know, Robert, I originally wanted to build a company around silver. I thought that there was a dearth of good silver companies. You know, there's probably, I know, 250 really good gold companies globally. It's maybe 25 good, what I consider good silver companies. And by good, you know, people that are capable of getting to 5 million ounces a year of production. And if silver were to pull back in price, say, call it 25 or 20, the projects wouldn't have to be shuttered. And I thought the way of dealing with that was to go open pit. So we picked up 3 assets. Berenguela is our flagship. And originally we picked it up because of the silver. We're currently at a resource of, you know, 108 million ounces in measured and indicated, with another 30 million ounces inferred on our silver. And there's a new resource going to be coming out in September that's going to incorporate well over 100 drill holes that aren't in that resource. So, you know, your listeners might want to look for that. That'll be about mid-September. But along the way, what we quickly realized is, as you alluded to at Berenguela, we have copper and we have manganese. So right now we're at about 55 million tons of 0.7 copper, and we're also at 55 million tons of manganese, about 7%. Now, manganese is an interesting metal. So historically, when the geologists found manganese associated with various deposit types like copper, and in our case, silver and copper, they were usually told by the head offices, look, it's going to be very complex metallurgically, and metallurgy just allows us to separate the metals. So I can separate the silver, the copper, and the manganese and get a good recovery. So we're getting, you know, you want to be up in the 90s, which is where we are, and in the high 80s versus in the 60s, because it just would make a deposit like that uneconomic. So what's changed is in the last, let's call it 10, 15 years, there's a new process called hydrometallurgy. It's not really new, but it's been around about 25 years. And hydromet uses chemicals instead of a mechanical process. So that's what we're using at Berenguela. And the idea will be to produce a silver product, a copper product, and then manganese. Now, the other key thing that happened with manganese, there's tons of it worldwide. It's largely used in the steel industry, ferromanganese. We have a product called, it's a manganese oxide, and it can be used in the EV battery space. Now, if you look at the EV chemistries for the batteries, just about every single one now and projected calls for manganese. It's largely replacing some of the cobalt in the cathodes. It's slightly better at reducing the combustibility, gives you a little bit more energy. But the real reason, manganese trades in the United States for $2,500 a ton. I think cobalt's about 10,000. So there's some huge savings to the battery manufacturers, hence the EV manufacturers, by using manganese. You know, and people have said there is no EV car revolution right now without manganese. So we're fortunate that we've got a product that's come into vogue in the last 10 years, and we have a way of separating it due to modern technology. So it's a bit of a perfect storm for us. But as you said, Robert, I would suggest 80% of our market cap, which is currently at, I'm talking Canadian company, 200 million. And I would think up to 80% of that's valued in the silver. We're still, if you look at our numbers, one of the bigger silver plays globally for development stories, and it's growing, you know. And the other thing too is, if you look, this deposit comes right to surface, like literally. So one would think it's going to have a low strip ratio now. We're going to either do a PEA later this year, early next, or next year we'll go to PFS. My druthers is to try go straight to PFS if we can, pre-feasibility study. A lot of those numbers will then be released publicly. But
yeah, that's what I was about to ask you. Why do a PEA when you're already at a pretty advanced stage and you could probably go straight to PFS?
But yeah, that's a good question, because I think our drilling spacing is tight enough that we're already at, PFS level there. So we'd have to do some little bit of geotechnical and some hydro drilling. So we wouldn't have to do further drilling to go to PFS. And our met work looks like it's all done to PFS level. The question is, now you've got to get some better understanding of your contracts, like the port, the rail. We're only like 3.5 miles from a rail line. We just have to get some guarantees that there's availability, which we believe there is, and incorporate those into the PFS. And then we have to decide how we break up the PFS, because we are going to need to do a pilot plant at some point. We'd like to do it sooner than later, but a PFS is tighter. I think it gives you more information as the investor, and it's not predicated on our assumptions. It's based more on facts.
Okay, so let's talk about the resource that you published and sort of dig into this a bit. So you said the deposit outcrops at surface. So does that mean that all of these silver ounces and copper pounds and manganese tons are potentially mineable in an open pit setting?
Potentially, yeah. We go down to about I want to say about 120 meters. It starts right at surface, so that should lend itself to a low strip ratio. The PEA PFS will confirm what that's going to be, but I'm assuming, being that it's right at surface, the ore body is a perfect shape for open pit style mining. So
it's like a bowl.
Yes, exactly. If I dug it out myself and put them in, I couldn't have done it better. Yeah, exactly.
Okay, so this is going to be open pit, but obviously you need to do an economic study to confirm that. So the average grade, so the average silver grade is somewhere around 75 to 100 grams per ton silver on average. The copper grades are actually pretty good. You've got 0.85% copper in measured. So what's going on there that has the copper grades so high?
Well, I think what's happening is, and if you look at how the distribution of the copper, so this is a carbonate replacement system. And the best way I can describe it is, I think of it as a giant sugar cube, which are your limestone rocks. And if you poured hot coffee onto that giant sugar cube, it would dissolve and the coffee would go into it, precipitate out. That's what happens. There's an intrusive somewhere. Now, it could be on our property, maybe it's not, but we're seeing indications it is. Those fluids come into the carbonate replacement system and they precipitate out. And right now, the CRD, carbon replacement deposit, and you'll see this when our economics come out, we think it's got enough for certainly a 15-year mine life. That'll be demonstrated by those numbers. And it's still open, but it starts off in the west as more zinc rich, and as we've gone east, the copper grades have increased. Now, our last copper drill hole that we put out in the east was following up on a 100-meter intersect of, I think, 1% copper. We hit 153 meters of 1.26% copper, 7% manganese, and 290 grams of silver. That's telling us we're getting closer to a heat source, which is the intrusive. So the copper is increasing as you move east, and it has the potential to be significant. That hole is the equivalent to 5% copper at 150 meters. And then we followed that up with another 100-meter intersect. So we're going to follow those drill holes up. And I'm going to talk in kilometers, 4 kilometers away, So what's that? Call that 2.8 miles. We're seeing indications that there's another type of deposit, comes right to surface. We're seeing skarn mineralization on surface up to 2% over a mile, and sitting below it is a geophysical anomaly, a big IP anomaly. So that's going to get drill tested next year. We're just permitting that. So
that's the southwest intrusive target you're talking about?
Yes, exactly.
Okay, yeah, this is so the exploration potential here is pretty exciting to me, because I don't see many companies drill 123 meters of 1.17% copper near surface. I mean, that's pretty rare. And then when I'm looking at your sort of plan map there with the exploration targets, the fact that there's an active magnetite mine right adjacent to your intrusive target, well, that just screams porphyry to me.
You're good. You're very good. That's actually a key, because magnetite is associated with the sequence that forms these skarn deposits. And so the geologists, which I'm not, tell me that that's key. So having that close by, you've got mineralization at surface over a significant length, and you've got an IP target sitting below it. You know, that's quite exciting. So if that's all you had as a junior company, I think you could build a company around that, assuming you make an intersect, and it would be very interesting to producers if we hit on the skarn. I describe it like this, Robert. I think right now we have a tier 1 asset, and a tier 1 asset is something with high enough grade that no matter what circumstances, it would work. Tier 2 asset would be described as something that in good markets works, in bad markets you don't have to shut it down. Tier 3 only works in good markets. But if we found a skarn, or if we found the porphyry associated with the CRD, I think you have the potential to be a world-class project.
Yeah, so yeah, let's unpack that a bit. So currently, let's just use a ballpark market cap of 200 million for Aftermath. And that's based upon the resource that you've published to date. Correct. And the whatever it is, 140 million ounces of silver and a little less than 1 billion pounds of copper, and then you have 2 or 3 million tons of manganese. So the market is valuing that at $200 million right now. But the blue sky is the exploration upside on the project. And where else do you see the blue sky is here?
Okay, so I see the blue sky as, and those numbers are also, the majority is in measured and indicated, but in our new resource coming out, you'll see, I think, some of the inferred go into the measured and indicated category. You're welcome to go onto our website and get the breakout. But I see the blue sky basically threefold. One is we're going to drill that skarn target. That could be significant. Number two is we're following up on those big eastern copper intercepts. I say copper, but they also had good silver and manganese. And then potentially there could be, the model is as you get closer to the heat source, the intrusive, that your copper grades generally go up, and we're seeing that. Plus, we're seeing some intrusive mineralization associated with the CRD. You could hit on that. But the third thing is manganese really hasn't caught on with the investing public yet. It's starting to, with the institutions are looking for good manganese story. So when we start to get some traction on the manganese, our shareholders get exposure to that as well. And look, I think we're going to be one of the larger manganese deposits globally, and we have copper and silver to offset any costs, and we can flip it around. We could be silver copper and have the manganese pay for that. So that's an optimum scenario. The downside to having three metals is your metallurgy. And if you look at the company, I think we're de-risked geologically. There's a lot of ore or a lot of mineralization there, and the economics will come out in the studies. From an engineering point of view, it comes right to surface. So we think we know what the mining method would be, and that'll certainly help. We just need to demonstrate that the metallurgy works. Now, the problem with manganese, and it's like a lot of those battery metals, if you will, the manganese is unique to our particular deposit. So a manganese deposit, in our case in Peru, is going to slightly have different chemistry than ones, say, in Botswana or Europe. So you have to make sure it works. Now, the key thing with manganese, to produce it for EV batteries, it has to be able to get to 99.98% pure. Now, we've released our initial metallurgy. We've got to 99.9%. So we're there, but we need to scale it up in order to demonstrate to the OEMs and show them specifications that we can produce a product that will work in their chemistries. So that's kind of what we're doing going forward. So I always explain it like this. If you own Aftermath, the shareholders have the equity, which is basically the silver, but now you've got upside as a warrant in copper and manganese. And I think if you look at the amount of copper we have, it's not insignificant.
Okay, I was going to ask you about manganese, but you pretty much explained it all there. I'll ask you one more question about the manganese. I'm not a manganese expert. I've followed a few projects in the past, haven't followed the manganese spot price much lately. Tell us about the pricing of manganese and the grades that you have. Those seem like pretty high grades.
Well, paradoxically, it's as simple as it is complex. So there's a bifurcation in, I think, a lot of the metals markets now, particularly in critical metals, where it's either going to go to China to be refined, which in manganese case, it's now 94% is refined in China. I think the current price is anywhere from $800 to $1,000 a ton. United States and Europe pays $2,500 a ton. The United States is probably, 30 years behind China on securing critical metals. The only way to solve that is to throw trillions of dollars at it. And I think that's what you're going to see. They're going to ramp up their refining capacity in the US. So, we're looking at our project. We think eventually, all things being equal and it's economic, the product going to United States on the manganese front. But it's closer, it makes more sense, and B, the US is going to help offset some of our costs, we believe, by applying grants or loans. You're already starting to see that taking place. I don't know if you're familiar with an Australian company, Element 25, produces manganese. They have an agreement with the US to access, I believe it's $289 million if they send their ore directly from Perth to, I believe it's Louisiana, so power. And then the US federal and state governments are going to contribute. So I think that's the model going forward. We'll be, I'm sure, having some talks with the US government, probably sooner than later, I would imagine. But, there's not a lot of manganese deposits of our nature globally. So it has to be oxide or carbonate for the industry. And ours is oxide, fortunately. And so far, we've demonstrated we can produce a product that potentially could be used in EV batteries.
Tell us about the location of the Berenguela Project, and tell us about the infrastructure in the area, labor, workforce, and what kind of transportation, rail.
Well, yeah, we're in southern Peru in a mining area. We're about, say, 3 hours by car from a town called Arequipa, but we're about 4 miles from a town called St. Lucia, where it's got a mining history. It's a statue of a miner in their city square. So that's where we're getting a lot of our local people from. The project's pretty well run by all Peruvians, but fortunately, we're very close to a rail line, about 3.5 miles. So what we're looking at, and this will come out in the economic reports, is you would just build a spur to the deposit. You can actually see the rail line from the deposit where it is and see the town. And then you would probably take your ore down to the coast and process it there. And there's a highway that comes up right beside it. And you're only 3.5 miles from power, which is another key aspect. So on a project of this scope, fortunately, we've got a lot of infrastructure. I've worked in the past in Canada and Alaska, and that was always one of the challenges. If you find something big, you've got big infrastructure costs. Here, we're lucky because it's largely built in.
I see. Okay. Where are you at in terms of the permitting there? I mean, obviously, you've been drilling, you have access to the site. Have you started more advanced, permitting?
We've got we're actually permitting that skarn target right now. A lot of the other permitting we has already done surrounding Berenguela, but we've started our water test work. I believe we've started some of our air. We need to understand the scope of the project to make I guess the next stage is we'll do the get to pre-feasibility study, feasibility study on the back of it. Then you make a production decision, and then you go for your big construction permits. If I had to reverse engineer it, I would suggest this potentially could be in production by, in the next 6 years. Usually it takes about 2 years to get your permits in Peru, 2-year build, and maybe we're 2-3 years out from completing, all our economic studies, including a feasibility. But the good news is at that point, manganese is slated to go up to double. So, it could be as high as $5,000 a ton. But we're modeling it down at these levels just to be conservative. And, you've seen the breakout in silver. So, fingers crossed with the silver. Our largest shareholder, Sprott, is, I don't know, he's probably one of the preeminent silver investors worldwide, and Eric has a very bullish outlook on the metal. We don't need it to, we're thrilled where it is, but there's a lot of leverage with silver on this company.
Yeah, you have over 100 million ounces of silver, which is a pretty substantial resource. And the fact that it's starting at surface, it's so easy to access, definitely makes it more valuable. Yeah, let's talk about the share structure and some of the largest shareholders. You mentioned Eric Sprott. It looks like he's about 14%. Tell us about some of the other large shareholders of the company.
Actually, Robert, last September, he saw our CEO, Ralph Rushton, give a talk at Beaver Creek, one of the big mining shows. And he phoned the next day and asked if he could go back up to 19.9. So that was predicated on silver, and Eric then phoned a month later, and he kind of was laughing. He goes, I probably should have done a little bit more due diligence, but I didn't realize how much manganese you have and how well you're positioned compared to other manganese potential deposits worldwide. Can I go to 25%? So Eric's now 25%, which is about, I think, 72 million shares of the.
Wow.
So I think we're his third largest holding, maybe even second now.
Yeah, 25% of 210 million. Yeah, that's got to be in his top 5. Okay, well, I didn't know that. And so how much cash, does the company have now?
We've got about 11 million. So it depends which way we go. If we go to a pre-feasibility and we're looking at a pilot plant facility, maybe that'll mandate a raise next year. But right now we're fine. We've got enough cash to get us through certainly further drilling and other work. And then, one of the other things that we haven't really talked about, we've got a secondary project called Challacollo, which is in Chile. That's almost a pure silver project. close to 60 million ounces, with I believe it's 38 million being in measured and indicated, and the balance inferred. That's a project, or actually, it's 45 million ounces. We would like to do further drilling there as well, because I think we're heading into a silver market, and I think if you can add additional silver ounces to the company, it's not going to hurt.
Yeah, I would say we are in a silver market here in 2025. I would say we are in one. Well, which inning we're in, that is another question, but it's probably not the ninth inning.
But if listen to Eric, and he certainly knows what he's doing. This is the national anthem. You're just getting warmed up.
Yeah,
right?
National anthem. Yeah.
We've been waiting to break that $35 an ounce, and we're there. The gold silver ratio, in my opinion, is still too high. And silver is used in just about every high-tech application, solar panels, planes, jets, everything you can think of uses silver. So I think its future is very bright, no pun intended.
Okay. So the second half of 2025, I know the seasons are a bit different down there in South America, so I'm not sure how that affects your planning. But tell us what the company has planned for the second half of 2025. And obviously, I love to see these new targets get drilled. So when do you plan to drill that southwest target there?
You know what, we're looking at the southwest target could be, I think that'll be Q1, Q2 of next year. We're just waiting on the permits to come in. We will follow up on those eastern holes, hopefully later on this year, it looks like. Probably be back at it September, October, or October, November. Yeah, the seasonality, don't forget, that's their summer down there is our winter. So the elevation's 4,200 meters, which is high. Like if we went up there, we would feel it, but it's not high Andes. You can drive right to it. It's more kind of rolling type of hills. So we can go year round. The only challenge we really have is during their wet season, which call it January through April. If there's any lightning in the area and there's warnings, we have to shut everything down just for safety precautions. So that would be if we're drilling.
I see. So the drilling of that juicy southwest target is going to be early 2026. In 2025, you're still going to continue to step out to the east, where you encountered some higher copper grades and higher, silver grades in recent drilling. What else does the company have planned in 2025?
Well, I think in 25 you'll see the updated resource. That looks like mid-September. That'll incorporate, I believe, about 140 drill holes, and over 90%, 95% of our drilling hit over the last two drill seasons. So a lot of it was infill. That's why I said the inferred will go into measured and indicated, some of it, but there were some step outs included there, so it should increase the size of the resource, one would think. And then follow up on that drilling, and then we've got a lot of marketing planned. There's a lot of people want to see us. I think we're transitioning from a retail story to an institution, because they're looking to get positioned in critical metals. Copper, silver, manganese certainly fills that criteria, and it's a large ore body, or large mineralizing system, I should say. Large deposit. It's not considered ore until we put out those economic reports.
Yeah, I like to call it, an ore body, but it's not technically an ore body, I guess, yet. No, but it's pretty darn close. So, do you think the company will do an uplisting to the NYSE in the U.S. at some point in the future?
Yeah, look, I think we talked about that a few weeks ago. I think when our economic numbers are out, the New York Stock Exchange, the old Amex portion of it, seems very attractive. We've got a lot of American shareholders that follow us for the silver. I would say the U.S. investor follows silver more than anyone on the planet. And so I think that New York listing would be very beneficial. And I think we'd certainly look at it at that point. And I think it would, our share price should certainly justify that at that point.
Okay. Final question, Mike. Aside from yourself, can you tell us about 2 or 3 of the other key players that you have on the team?
Yeah, our CEO is a gentleman by the name of Ralph Rushton. Ralph is probably 35 years experience in the industry. He cut his teeth as a geologist for Anglo American and worked for Anglo for 15 years globally. Spent the last 20 years in Vancouver working initially with Simon Ridgway's group of companies, and for the last 5 years has worked with myself. One of the toughest things in the industry, we talk about finding ore bodies, it's finding good people. And people like Ralph are hard to come by. He's a geo, but understands capital markets and has a great network. And then our technical person is Michael Parker. Michael Parker is the former country manager in Peru for First Quantum. I believe First Quantum's 5th largest copper producer globally. He also worked as country manager in DRC. And if you can work in the Congo, you can work anywhere on the planet. But Michael put together all our drill programs. The Peruvian team did a spectacular job. But one of the most important people that we have is a guy named Victor Grande. I think if anyone ever tells you there's no permitting issues in the mining industry, Rob, they're lying to you. Action's lying is a strong word. They're being disingenuous. We always have permitting issues because there's NGOs and groups that no matter what want to stop mining, even though you have to have it for everything that we produce on the planet. But so we've got Victor Grande, former World Bank Development Officer, and he's handling all our community relations and also dealing with a lot of the permitting and helping with that as well. So that's the genesis of our main team. We've also just brought on some very, very good consultants out of London, considered some of the best in the world in critical metals and manganese, called Galleon Partners. So I think one thing with these type of deposits, you've got to be able to demonstrate you can put it into production. Now, along the way, if your project is robust enough and good enough, other people come to the table. But if they think that you're going to flounder and not be able to advance it, they'll just wait for you to fail. So, I've always had the opinion, you hire the best people you can get, and that's what we've done today.
I think that's a really important point you just made, because a lot of junior mining investors are always talking about the buyout, the buyout, the buyout. But think about what percentage of companies actually get bought out by a large mining company. It's a pretty small percentage. I mean, I might even say it's less than 1%. So if you're betting, like if your investment thesis is the buyout, it's not a very good investment thesis. The company has to be able to build it, right?
Well, I've had, one thing with our board, all of us have been involved in buyouts at some point in our careers or M&A activity. Our independent director, David Terry, was an independent director on Great Bear, and that was bought out for, I want to say, $2 billion.
Yeah.
Now that's an outlier. I think that was the best transaction.
Extraordinary.
Not suggesting Aftermath's a Great Bear, but at the same time, there's a statistic I've seen. Those of us that have been involved in M&A and buyouts tend to have more than just one, because we're offered good projects to begin with, and that's always the key. Is what's the actual asset, but we also have access to capital to advance the project. So getting a buyout, so people think it's easy. It's not. There's certain things we can do on the company side. I'll give you an example. We use the same engineers that the guys that would look at us would use, so that when we're sitting across the table with their mining engineers, geologists, and bankers, they can look at our data and feel comfortable that it's accurate. So, and we use the same permitting consultants. You know, it's the mining industry globally, it's a small universe. We all generally know one another, and we know the key people that you need to advance a project to the point where other people will look at it as a potential acquisition, or it's big and robust enough that you can finance it into production and your data warrants it.
Okay. Mike Williams, thank you very much for your time.
Hey, Robert, thanks for having me on. Hope to talk to you again.
Cheers.